Okay, let's dive right into this because today we're unpacking an explainer of some seriously fascinating source material. It completely reimagines how we look at charity, at waste, and really at how we support our communities. We're looking at Donate. They're positioning themselves as the definitive digital trust infrastructure for what they call the kindness economy. If you've ever looked around and wondered why there's so much excess in the world, yet so much unmet need right next to it, well, you're going to want to pay close attention to this. The core mission here is all about coordinating generosity, idle assets, and measurable impact, but doing it at scale. This platform isn't just about giving people a warm, fuzzy feeling. It's fundamentally designed to make value move much, much more intelligently across communities and corporations. Think of it as bringing real system-level efficiency to human goodwill. So where did this whole idea actually start? It began with a really powerful light bulb moment from the founder, Segun Oke, back during his time at Bridgewater's foundation. He literally witnessed a commercial bank operating in the exact same building as him, manually auctioning off their used furniture and operational assets. And meanwhile, right next door, social organizations were desperately struggling just to get their hands on basic resources. It's just a perfect, real-world illustration of this paradox: immense abundance sitting right next to acute scarcity. And that brings us to the core thesis of this entire platform: the global paradox. There are literally billions of dollars in perfectly usable value. We're talking corporate assets, household items, underutilized services, just sitting completely idle around the world. Yet millions of people and institutions are still struggling for essential needs. So the absolute key takeaway here is this: the problem we're facing isn't that there's an absence of value in the world. The value is there in sheer abundance. The problem is a massive systemic failure in coordination. Think of this like a financial mirror. Over in traditional finance, we've built this incredibly sophisticated global infrastructure to formalize our money. You can borrow against future income or wire funds across the globe in seconds, right? But the kindness economy, donations, used goods, volunteer services, it mostly operates completely in the dark. We've built these incredible pipes for cash, but basically zero pipes for generosity. And that is exactly why Donate is introducing the kindness capital system. This is brilliant. It lets you finally generate a kindness statement. Imagine having a highly verifiable bank statement, but for your social capital. It finally brings total visibility and proof to goodwill. Now, this lack of infrastructure, it's not just a missed opportunity. It's actively harming communities. When value can't flow efficiently, you get extreme waste. Perfectly usable goods go straight to landfills. It causes social exclusion, and it actually creates upward inflation pressure because people are forced to buy brand new things instead of utilizing what's already floating around in their ecosystem. The end result? Highly inefficient aid. The immense goodwill that already exists out there is essentially trapped. It literally cannot scale. And this is the exact void Donate is stepping into. They're creating a digital ecosystem that acts as those missing pipes, allowing members to store, trade, track, and exchange idle assets. But, and this is a really crucial point, it's not just physical goods. They're specifically emphasizing the exchange of skills and professional services too. They're acting as the formalizing layer for a multi-trillion-dollar informal market, building the infrastructure to coordinate measurable social impact across the board. Okay, so how does this actually play out in the real world? They call it the social value loop. Let's walk through it. Step 1, a corporation or an individual donates idle assets or maybe their professional skills. Step 2, nonprofits or community hubs receive that support. Step 3, and this is where it gets cool, those items and services re-enter marketplace circulation. They don't just stop at the first recipient, they keep generating recurring value. And step 4, communities gain access to what they need, brands get verifiable visibility, and the platform itself earns recurring revenue. It completely proves that goodwill doesn't have to be a one-off event. But let's be real for a second. Moving physical assets requires logistics, right? And logistics can be notoriously expensive. Well, Donate solves this through what they call decentralized physical scale. So instead of blowing cash on massive centralized warehouses, they're crowdsourcing the physical infrastructure. They're literally transforming everyday homes, local shops, and existing community spaces into neighborhood fulfillment hubs. This completely slashes their logistics costs while simultaneously driving this really deep, grassroots community ownership. Let's pivot from the philosophical side to the financial side. How does Donate actually monetize all of this?
They've built a multi-layered revenue engine. They take a 5% fee on cash donations, a 10% commission on non-cash donations, and a 10% commission on digital auctions. So they're capturing a small, highly sustainable slice of the immense value that they're finally allowing to flow freely. And when I say immense value, I mean it. Check out these numbers. We're talking about a projected $5 trillion circular economy market, $1.5 trillion in corporate social responsibility and ESG spending, $1 trillion in social commerce, $850 billion in diaspora remittances, and another $800 billion in global philanthropy. These are just massive, globally significant markets that currently operate in total silos. Algodonit is stepping right in to coordinate across all of them. Now, to ground those huge trillion-dollar numbers for a second, let's look at the specific slice of the market Algodonit is actually targeting right now. Their total addressable market is an eye-watering $500 billion plus infrastructure participation opportunity. But they're staying focused. Their serviceable available market zeroes in on a $15 to $25 billion slice across emerging markets, diaspora ecosystems, and CSR coordination. And their initial obtainable market, the highly actionable piece they're grabbing today, is a very realistic $100 to $250 million ecosystem opportunity. What's truly compelling here, though, is their projected blended gross margin, 45% to 65% over time. You might be wondering, why is it so healthy? It's because their unit economics actually improve significantly as the whole system scales up. As their network density increases and as items repeatedly circulate through that marketplace, all powered by those decentralized community hubs we talked about, their overhead stays super low while their transaction frequency just naturally goes up. And we aren't just talking about theory here. They've already got some serious early validation. In just the first 2 months of their initial launch, they onboarded 500 users. And even more impressively, they supported a major fundraising campaign for the OE Wellness charity organization, and they facilitated roughly half of an $850,000 healthcare target. This kind of early traction proves a vital point. The market is already pulling this product right out of the founders' hands. The willingness to help is absolutely there. People just needed the right tool. In fact, that initial demand was so overwhelming that it exposed some limitations in their early infrastructure. So they made a highly strategic and honestly quite brave decision. Instead of trying to patch and scale a fragile system, they hit pause to rebuild. They're currently developing an enterprise-grade multi-tenancy architecture. What that means is they're building a wildly robust system that can securely and efficiently host dedicated corporate ecosystems, large NGO infrastructures, and massive institutional layers all at once. So let's map out exactly how they take this shiny new, robust architecture to market. Years 1 and 2 are highly focused on scaling pathways, specifically leveraging the Ninja Campus, National Youth, and African Impact Challenges to build critical mass. By year 3, they project expanding heavily into diaspora networks in the UK, US, and Canada, which should drive an estimated 20 to 40 million in gross merchandise value. And by year 5, they're aiming for full global infrastructure scale, driving $15 to $35 million plus in actual top-line platform revenue. Of course, executing a massive enterprise vision like this requires a very specific type of team, and the founder market fit here is off the charts. Founder Segun Oke brings a really crucial supply chain background, backed by an elite education from MIT, Holtz, and Tram. Partnering with him is Chief Solution Architect Pius Adigwe, whose deep expertise in enterprise engineering and multi-tenancy infrastructure is exactly what's required to actually build this highly scalable, trustworthy platform. To fuel this massive next phase, Algodonit is currently raising a $2 million seed round, targeting a $10 to $15 million pre-money valuation. And a look at where that money is going. A full 50% of this capital is dedicated purely to technology, infrastructure, and that critical multi-tenancy development. They are investing heavily right where it counts, in the scalable tech required to be the ultimate digital trust layer. The remaining funds are smartly distributed across growth, fulfillment, and enterprise acquisition. Which brings us to our final thought. Going through this explainer of the source material makes one thing incredibly clear. The global willingness to help and the actual assets required to do so, they already exist in absolute abundance today. This global paradox of idle wealth sitting next to struggling communities, it isn't some inevitable law of nature. It's just a missing piece of software. So the question now is, are we going to stop just staring at the paradox and actually help build the scalable trust infrastructure to finally unleash it?